This is Irontrader, and this is the weekend edition. Today, what we're going to do is we're going to look over some ETFs. Okay, those are exchange traded funds, and that's an easy way to trade a sweet basket of whatever you're trading. Give you an example here. First of all, we're going to look at UCO, which is a two-time leverage for the oil, and then we're going to look at USO, which is one-time leverage, and then we're going to look at UNG. For natural gas, which is a one-time leverage, and BOIL, B-O-I-L, which is a two-time leverage. And then we have TQQQ, that's for the NASDAQ, UDOW for the Dow, UPRO for the S&P. And then we're going to look at a couple of ETFs here, like for the tech trades. First one's going to be AIQ. The second one's going to be BOTZ, B-O-T-Z. And then we're going to look at the ETFs for gold and silver. So for gold is GLD, and for the silver is SLV. This video is for information purposes only, not a recommendation to buy, sell any stock, commodity, ETF. Please like, subscribe. Thanks for watching. Okay, first of all, we have here is UCO. Now, this is the oil ETF. Now, I trade this all the time. And then here's crude oil. So what we want to do is we're going to do the comparisons on how the actual crude trades out to the actual ETF, okay? So here we have your crude oil. And we can see here where, you have your support and resistance levels here. So like Friday, we had an inside day. And then we have your 8-day rate above it. Now, when we look here on the leverage ETF, you can see how it is different, okay? See, so what you always want to do when you trade these leverage ETFs is always put a chart here side by side, okay? Like say this one here is the crude oil, and then you can get a pretty good idea of what's going to go on. Now, again, the charts are very similar. So when you look at this here, you can see the same pattern. We have a low, higher low, and then she's riding all the way on up. So it is the same pattern, going all the way on up in the same way when you top down out. So what you have to do with these leverage funds is always put side by side here, okay, your actual commodity and your ETF, okay? So like right here. Now, what we're looking for here on UCO, you can see we're on the actual commodity, we had an inside day, which means your high and the low is within a high and low of the previous day. Now, what do we have here? Okay, we had an actually 31.59 was a low, and right there, 31.65 was the previous day. So we had a lower low. See, that's the leverage part. Okay, so when you trade these, what you always want to do is look for the support and resistance levels here on the actual commodity, and then we can see where this is at the time. Then you can take your trade. So if this comes all the way down to this 21-day here, well, we look at this 21-day here, so it might be just a little bit lower here than what we actually have. So if this one on your actual crude hits that, say 79.43. You don't want to buy the 30.51 because we just want to look over to the candle on the left-hand side, and we're going to be looking a little bit lower than that there at about 30.36 here, okay? So just when you look at these leverage ETFs, they're very similar, but yet they're different, okay? So this is a leveraged one, the UCO. Now I'm going to show you the USO, which is 1-to-1. Okay, now this is the USO 1-to-1 leverage, okay? So when we look at this here and we look at your regular chart of crude oil, you can see here the similarities, okay? These are basically, see, it's basically the same exact pattern, okay? So this is basically one-on-one. This is the USO versus the UCO. Now, the UCO that leverage has a little bit more juice, but this is a really good trade here if you're looking at more of a, say I'm going to buy a long-termer, okay? So when this is down in the area, I'm long all the way from here because I always look at the seasonality coming up here. So when I can find a good bottom area, then I just add to my position on this here. But this is like if you want to take a longer term, you can use the 1-for-1 versus the leverage, okay? So when we look at this inside day that we have here on the actual crude, well, you pretty much had the same thing here, okay? So you had the higher low kind of a situation. So the USO here is a very, very good trader. Now, you can also trade this here. And it's a little bit more, I should say, safe than a leverage funds, where leverage funds will rebalance at the end of the day, where this one here, not so much here. It's going to be pretty much whatever crude is is what you can do on this UCO here. So when this comes down here, say to this 21 SMA here at 79.43, then you can look at the UCO and say, hey, this is at 74.84. If it holds that support here on your actual commodity, then you can actually buy it here, and you can have that one-to-one relationship here with crude. Now, again, it doesn't have the juice of the UCO, but it has a lot of good action towards it, okay? So next one we're going to look at here is going to be UNG. Okay, here is UNG, the ETF, okay? And then here we have the natural gas. Now you can see the pattern, okay? Almost identical, okay? Next I'm going to show you is BOIL, B-O-I-L, which is the leverage, and you'll notice that the difference. Now, I like trading this UNG here, okay? First of all, your price is very low. You're sitting around, in the $15 level here, where you can go there and take 5,000 shares. If it gets ripping, say above that 21-day here, then you can make, say, 10,000 shares or 15 or maybe even 20,000 shares because the price is very low, sitting at, $15. Now, when you compare the charts, okay, so you look at natural gas here, what are we looking for? We're looking for that 8-day. We're looking for that 21-day. Now, when you look at the UNG, it's the same thing. We're looking for that 8-day. We're looking for that 21-day, okay? So you can put this and actually trade off of this chart here very easily. Now, you always want to have your commodity chart on the right, and then you can put your ETF chart here on the left. But you can see the similarities here, okay? So you're right below that 8-day, okay? You're right below that 8-day. Your 21-day here looks like it's rolling over. What do we have here? 21-day looks like it's rolling over. Look at your price channel. See? Exactly very, very similar to what you have on your commodity one. Okay, so this is a very good one to trade here. And again, you don't need that much. Even if you say, hey, I'm going to do a 10 cents, 15, 20 cents. But if you got 5,000 shares here and you did that a couple of times, that's pretty good, especially if you started on Monday all the way till Friday. That consistent money like that, very, very easy. So you don't need a whole lot here to make the money, okay? So now what we're going to do is we're going to look here at BOIL, B-O-I-L. Okay, now here we have BOIL. Now this is a leverage fund. And what you have with this is the 2-time leverage. So it gives you a little bit more juice. Okay, now the charts are similar, but they're not like what the UNG was. See with the price channel where it came up, the UNG was the same thing. This is just basically, like a fork going across, okay? So right now here is, if you look at you need to get above your 8-day and your 21-day here, but it's just not the same as what you have going on here on your commodity one, okay? So these here are going to be a little bit different, okay, because this is a leverage fund. Now, to think about these levers, remember, they rebalance every day. Now, BOIL, it just, they usually have these 3-for-1 splits and all this kind of stuff. So that's what you have to watch with leverage fund. So this is basically a trading ETF. Now, UNG, you can actually buy that and hold it here, and you're going to get a little, even though it did split, okay, it's just a little bit more like a one-to-one, so whatever natural gas is doing, okay? So again, this one here is very, very tradable. Don't get me wrong. It's just that the UNG is a lot easier here to trade. This one will give you a little bit more leverage here. Now, again, these are really good when you have a upswing, okay? So when you start getting up these upswings here, and this thing can roll up, okay, like we're looking at past here, see where this rolls up, you can get a lot of juice real fast. And what I do is I jump on this. Once you start breaking out of all your resistance levels, then that's a good time to jump on something like this because you can do a really good 2 times the leverage of whatever natural gas is doing. So this is also a very good ETF here to trade. But remember, this is a trading vehicle. It's not to buy and hold. The UNG is a little bit more. You could buy it and hold it, and you feel a little bit more comfortable than what you do with the old BOIL. Okay, the next we're going to look at here is we're going to look at the ETF TQQQ for the NASDAQ. Now, this is one of my favorite trading ETFs because what I like about this is look at the volume it has, okay? So if you look at the volume in this right here, okay, you traded 45 million shares, okay? That's always very, very good, okay? When you do volume, what you need to make money off of ETFs is you need big volume and you need big leverage, okay? Which basically means is you need movement, okay? That's the key. You got to have movement there where you're trading like a 2 or 3 or 4 point spread all the time. That is going to be the key. Now, when you look at these charts here, okay, you put these here side by side. Look how much is the chart is pretty much the same thing. Okay, so what you can also do here is you always want to chart, okay, here on your regular commodity here. But if you look at what you have here, you have the very, very good similarity in the trading. So when you say, okay, watch the TQQ, you want to watch a NASDAQ chart. You want to make sure that it holds that 8 SMA and that 21 SMA. But when you look at this, see, it's a really relatively the same thing. So you could trade off of this TQQQ. Now, this is the reason I like this is it has all that good technology in it. Okay, you have NVIDIA and Microsoft and Apple and Google, you know, and you even have Tesla and Costco in this. And you have all the good stuff that everybody wants is in this exchange traded fund. And if you can look at this, see, now look how nice this was here. You're all the way from 30. You already put in more than the double here. Okay, so that's very, very good. And then when you look, compare the two charts together, okay, you got the same chart. Exactly, pretty much the same chart here, okay? Got a little bit of variance here in your SMAs, but realistically, it's the same chart. So you can actually trade off of these charts. So even when we have a level here, so what we're going to be looking for here, like on Monday, is going to be looking for that 60.52 level, okay? That's what we're going to be looking for, okay? So that's going to be your 8-day and your 21. Now, again, if that is lost here, we know we have nice, good support here, okay, all the way up to your 50-day. So this would be a really good trade if you could buy it back down at the 57.74 level or even at that price channel level at 57.29. But again, if it holds this key level here, like at 60.54, that's also a very, very good trade. Now, you have to kind of watch this here because on the topping situation here, where we went right on up and we can't break through that key level, that 64.13. But if you can, then she can rip very much higher. But always want to put these here side by side, and that gives you really, really a good look here. Okay, so when you look at this, say, oh, okay, here, I can see what I got here, okay, and then I can see what I have here. So there is a difference where this broke out, but on this channel here broke out, but your actual TQQ didn't. But this is a really good trading on the TQ, and it plays us actually a little bit of a small dividend also, but it's just not something that you're going to want to worry about. I think it's like a 1% dividend or whatever it is. It isn't much, but this is a really good trader, really good scalping chart. Okay, so like example, this was here with that Fed meeting. So it came right on down here. So you had a 57.68 low. Okay, and then what did we do in that 3-day span? Okay, you went all the way up to right there, 63.95. Okay, so that is a lot of good points in just that 3 days. So we'll say you have 1,000 shares or 500 shares or 2,000 shares. You're going to make some good money here just scalping this TQQ. Okay, the next one we're going to have here look at is going to be UDOW. Okay, here we have UDOW. This is for the Dow. Now, you can see the charts are just almost identical, okay? So when you even look at these price channels here, okay, you can see where they're the same. Okay, let me just big this up a little bit here, okay? So you look at your SMAs. See your 8 SMA, your 21, okay? And then what we have here, identical to what it is. Now, this is a really good trade here if you want to trade the Dow. Okay, because it has a little bit of leverage in there, and you can get a really good feel. Now, you want to obviously always put these side by side, but you can see that the pattern is absolutely identical. Now, this is an easy way to trade the market, okay? All these ETFs are, versus, hey, I'm going to pick individual stocks, okay? So this has a nice sweet basket. So basically, you're just betting that the Dow is going to be going on up, okay? So if it does, this is a really good one here to go up. So now what we want to really watch here, if you trade this, is you want to watch that 81.76 here. That is your support. And then we have that 21 right below it at 80.89. And then you have your 78.57. But again, look at this 50-day, how nice it's holding. Okay, so as long as it holds that level, then you're good. If not, you will come right down to the price channel at 77.59. But again, this is a really good way. You can see we have a little breakout, and now we're testing this candle here at that 82.78. This is very, very good here on an overall pick if you want to just trade like the Dow situation. Now let's take a look here at the S&P. All right, here we have UPRO. Now you can see the chart, okay? Same thing as what we have with the Dow. Look how nice this follows this, okay? See, look at that. Very, very nice. But this is an easy way here to trade the S&P. It's just with the old UPRO, okay? This is very, very good, okay? So when we look at this chart, okay, basically what we're looking at, if the S&P sells off, you're looking at holding that 51.82, okay? If that's lost here, look how many times that 21 has held, okay? So that's looking at 51.37. So basically, you just do the same thing as you do on the actual commodity, okay? So the chart. So you're looking here. This needs to hold the 68.21, and then right below it here is your 68.65. And then again, if that's lost, you can come all the way down here. But look at this chart here. It's almost identical to what we have here, okay? So this is very, very good. So even when you look at this RSI, you can see it's doing the exact same thing, okay? Your MACD is doing the exact same thing. So if you want to trade the S&P, this is a really, really good way of trading the S&P here is with the UPRO, okay? So now let's look at a couple of tech ETFs. Okay, here's an ETF, AIQ, okay? So this one here, and the next one we'll look at is BOTZ, B-O-T-Z. Now, these two basically have all the AI in it. Okay, so AI right now is the hottest thing going. Obviously, you can see. Okay, so you had a 25 here, 39 on the bottom. Rallied very, very nice here, all the way to 34, 35 here. So you had a pretty good run of almost 10 points here on this. So this has all the good stuff in it. Your NVIDIAs and your Apples and your Microsoft, anything that has to do with AI is in this, and it pays a small dividend. Same with the BOTZ, that pays a small dividend also. So this is a good way here trader if you're into the AI trade. Okay, so what you want to look at here is on the upside, you want to have that 34.35. Okay, if you can clear this, then basically your target is going to be the $50 range. That's what it's going to be. On the downside here, what we're looking for is we're looking here at this 8 SMA here at 33.72, and we're looking at 33.60, your 21-day, and then we can start coming all the way on down. But there is the bottom of that candle is a 33.48. And the top of that candle is 33.47. So just a little bit of a gap, nothing major. And then you could come all the way down here to your 32.97 and then possibly down to your 50-day. But you can see here how nice this is holding all the way on up. You have a bottom left, upper right kind of a chart. Now, when we look at the weekly chart here, okay, this in here, look at that, how nice that was at 18.01. So if you just took a long trade, all the way off that, you went all the way to 34.35. That was that'd be a lot of good money maker. Now, when we see this pattern here, you look at your left shoulder, your right shoulder, and then it's not really much of a head and then not much of a right shoulder. But once it broke out, you can just see how you're holding that 8 SMA here all the way on up. So this one here is like if you want an easy way, really an inexpensive way here to trade the AI, this is one that you might want to take a look at. Okay, so the next one we're going to look at is BOTZ, B-O-T-Z. Okay, so BOTZ is pretty much the same as what we have to the AIQ. They're very, very similar, okay? Now, this one here is a little bit better because it has a lot more volume, okay? You can see where the volume is almost 1.4 million shares. So that's always something you want to get into because if you're trading large amount of shares, you want to be able to get in and you want to get out. That's always the main key. A lot of times you can't get out. That's the thing. So with this one here, what we want to always look at here, now you put in a nice good peak here at 33.60. This was probably when NVIDIA just screamed right on up here, and then she came down sideways. But you notice how you're holding this 21-day here very, very nice. Okay, look how many times that you're holding. So now, as long as you can keep holding this, that 31.80, you're looking really good. If not, you can come all the way down here to this 30.33. But what you want to watch here is also the bottom of this candle, which is 30.38, and then you want to watch the top of there, which is 29.67. So there's a gap and there's a fill, okay, if that 50 SMA is lost. But the whole thing is based on here, as long as this 21-day is looking good, you're in really, really good shape here, okay? Same way here on your weekly, this looks it's still very, very bullish. You know, your green is all over your red on your MACD here. This is showing really good relative strength going on here. And what do we have here? You're right above that 8 SMA, and your 21 is up. Your 8-day is rolling up here. All want to get above that 200-day. This is looking very, very bullish. Now, again, if you can break out of that 33.60, well, your next target is obviously going to be 40, and then maybe even possible 50. So, again, this is a nice, easy way to trade all the AI sector here on pretty much like on the cheap. Okay. All right. The next we're going to look at here is gold, the ETF GLD. All right, here we have gold, the actual commodity chart, okay? And then we have the GLD. Now, a lot of people like to buy the physical gold. I know like Costco was selling these little gold bars, but what people don't understand is when you buy that physical gold, there's a 4% fee to buy it and another 4% fee to sell it. You just don't buy and sell what you're going to get down at Costco or any kind of a gold. If you want to trade gold and you're a gold bug here, this is a really unique. Now I'll trade gold here every so often, but that's really a unique person. A lot of times it has a fear factor. So when things get like fearful, then gold wants to seem now here to rise. But you can see how the similarity are between these two ETFs here, okay? So when you look at this, see we had a nice big pop up here on Friday, and then she pulled right back down here, or that was, Thursday, and then it pulled right back down. The same thing what we have here on your gold chart. But this is a really easy way where you can get in and you can get out. And look at the shares. You did almost 7 million shares. So easy peasy, to get in and out of the old gold. So if you want to trade gold, this is a really good way. So when it tracks your commodity almost identical. Okay, so you can just see what happened here where you just ran up here and then it popped up, ran up here and it popped up. Everything's the same. So when you look at your RSI here, you look at your MACD, everything is pretty much the same way. So what you always want to do when you trade these is just do like like everything else I've been showing here, always put the commodity on the right and then put your GLD here like on the left. And then you can see exactly. So this comes all the way down here, down to the 21 day, say 21.33, and it holds it. Well, then you can buy it right there at the 196.97, and then she can go right up here. So these are so very, very similar that you can actually trade off of this GLD chart very, very nicely. Now, what you want to watch on here is you want to watch this bottom section right here, okay? So this is basically, we just take the low. You're looking at 198.94, so say 199. You really want to hold that level. If you don't, then you're going to come right down here to the 196. And now there is a gap in the chart, okay? So you're looking at 193.88. And there's your gap, and then we look at the high of this candle, 193.40. So there's a gap and a fill, and then you can hit your 50 SMA here. But what you always want to do, though, is just, I say, side by side, so you can see exactly what's happened with the actual commodity and then with what you're actually trading. All right, let's take a look at silver and ETF SLV. Now, here we have silver. Now, you can see where silver, it's had an okay rally, nothing like the gold, okay? Just nothing like the gold. But if you look at the charts, they're very, very similar in kind of an action, kind of a situation. Now, it's a little bit different here on your SLV here. But again, this is a good way to trade the silver, okay, versus buying the actual commodity. But again, if you like buying the actual commodity, say, hey, I want to have that physical gold in my house or whatever, that's fine. That's not a problem. This is just another option on what I want to trade. So when you look at like where your 8 SMA here is, okay, see, and then we have the 8 SMA here. Very, very similar charting. So your 21, your 50 day. And then when you look at your RSI, everything is very, very similar on these charts. Okay. So we always want to put them side by side because you never want to have that say, well, oh, this one here, but this one didn't go here. So if you just always look at, say, I want to trade silver, but geez, I want to buy it right down here. Okay. So you always look at say that 21 day, looking at 24.24, and then you can say, okay, I can buy the SLV here at $22 here. Okay, so this is what you always want to say. Always watch your actual commodity chart, and then you can always trade off your your ETF chart. So that always makes it very, very good. But these charts are very, very similar. So when you look at this, if you just keep selling on down, then you can watch your 21 day. There is a gap down here. at 21.39, and then there's a fill here at 21.28. So you have your gap and your fill again, but the charts are very, very similar. But this one here, if you do like silver and it does fall down, watch that 21 day here to see if it holds. If not, we have a lot of good support here, right now about that 22 to 2150 area right there. And then we have your 2130 right below it. But right there is going to be a lot of big support level here if this falls right on down here. But you can see the similarities in the charts where this gives you a good idea, if you want to trade these commodity, an exchange traded fund versus the actual commodity. Now, again, there's many ways to trade, but, this gives you just another option on say, hey, I want to trade silver, but I really don't have the whole grasp. Well, this is a good tool right here, SLV here, if you say, hey, I want to trade the silver, but I want to buy the physical commodity. Same with the GLD there for gold or any of the ETFs here that I pointed out here. Instead of saying I'm going to pick individual stocks, I can buy the TQQ. That's a nice basket of all the good stuff. Or, hey, I just want to buy the Dow. I think the Dow is going to go up. Well, then you can buy the UDow. You know what I'm saying? And then like for the oil, you say, oh, I don't want all that risk. I'm not going to do the UCO. I can do the USO. It's more of a one-to-one kind of a situation. Same way with natural gas, the UNG versus the BOIL. It's an easy way to trade. So what I try to do here today is just give you other options. Now, I know a lot of people on the site here, like me, we trade, oil and natural gas. But a lot of times, like natural gas here, is just very, very slow right now. It doesn't want to seem like get off the schneid. It's got to get above that 8 day and that 21 day. And it just wants to kind of go back between that little trading range. Well, then you can always look at and say, hey, wait a minute here. I can get into TQQ. Like last week, I think it was like 5 points there off of that TQQ. Well, I'm saying you take 1,000 shares, 1,500 shares, 2,000 shares. Man, I can make up for that slowness that was going on in the natural gas kind of situation. But again, if you just say, no, all I want to do is trade oil and gas, hey, that's fine. I'm just giving you a little bit of option here. If you want to trade other things, there's easy ways to trade sweet baskets of everything. You know what I'm saying? Versus, hey, I got to try to pick individual stocks and then see what happens with that. Okay, that's what I got for you on the weekend edition. And thanks for watching.